For more on this, Michelle Hennessy joins me now from Hong Kong. Hi, Michelle. Now, seems that China's economy is picking up once again. What are the latest numbers saying?
Well, the global recovery practically depends on China's recovery, Nafisa. Demand and production there keep the world economy ticking over. So there was a lot of pressure on these numbers today. If you want to look at the market reaction, I think investors found the data quite disappointing. Analysts, like you said, had forecast a growth of over 5%. So we saw China's major stock index actually drop after the news came out. But that headline figure of 4.9% rise in GDP. That's still higher than most developed economies could dream of, frankly, during the pandemic. The IMF actually predicts China will be the only major economy to grow this year. So on a wider scale, taking into account everything that 2020 has thrown at us so far, this is still an encouraging sign. And analysts, I think, will be encouraged by export orders and a rebound in retail sales as well, which were up 3.3% in September. So some economists reckon that will be an encouraging sign for the fourth quarter as well. So overall numbers are good, just perhaps not as good as some had hoped.
Michelle, you know, we've been talking a lot about rising tensions with the U.S. and other factors. Could this still impact China's recovery going forward?
Oh, absolutely. And we heard just then, didn't we, the National Bureau of Statistics in China. A spokeswoman said today that growth remained patchy. And some of those indicators that experts tend to look at to assess the economy, they haven't yet returned to the normal growth level. There's worries about debt. There's worries about the fiscal stimulus limit. And of course, these rising tensions with the US. Analysts think all that could risk economic imbalances and more uncertainty down the line.
Michelle Hennessy, thanks so much for that. As always, live for us from Hong Kong.